Welcome, and thank you for joining us for the Season 2 finale of ScotiaLive. My name is Adrian Reynolds. I am with Scotiabank's corporate and commercial banking arm. And today, we're going to be talking about the very interesting topic, men and money. We're coming to you from Zoom, and you can also see us on our IG page at Scotiabank JAM. Now, to discuss this topic of men and money, we have two special guests with us tonight. We have branch manager, Mr. Peter Mohan, branch manager for the Constant Spring Financial Center, and we have media personality, Mr. Dufton Shepherd. Gentlemen, thank you.
Thanks. Thank you.
Now, we also will be taking questions from our audience, so send them in and we'll do our best to answer as many as we can. So, we're going to start off with you, Peter. Studies have shown that men and women have two different attitudes towards money. Studies have shown that men tend to be a little bit more aggressive or assertive when it comes to long-term investment, and men also tend to save twice as much towards their long-term goals as women do. What are your thoughts on men and money?
I think our psychological makeup plays a very key role in terms of how both sex, deals with money.
Right, males, men and women.
Yes. So you look at, there are four ways when you look at money. We're talking about money as power.
Yes.
So that status spender. Money as generosity, that generous indulger. And then money as security, the secure saver, and then not last but not least, the money as freedom, that independence lover.
And lots of people speak about wanting money to give me the freedom to do this and freedom to do that. Yes.
Yeah. So when you think about all four, you can categorize an individual under any of the headings.
Right.
So we are, when you think about it, we use money every day. So you want to start thinking about how am I spending? What do I spend? What do I save? What kind of spending habits I will develop along the way. Our relationship with money, how risk averse we are.
Yes.
And, seeing money as a security, help to reduce the risk exposure in terms of, an individual, men or women.
Definitely.
So men tend to have a different view, though, in terms of priority, as against a female or a woman.
Right.
So a man will more than likely be thinking about the vacation and then the credit card payment, and the woman will be thinking about the flip side, where she will look at the credit card payment, then the vacation. So men, while they're identical in terms of goals,
right,
it differs based on maybe how they are brought up.
Right.
That's how I look at it. So the difference in gender, they're similar, very much in terms of the money they get, what goals they have in mind, how they start saving towards that. So men will tend to set aside twice as much as a woman.
Right.
That's just how the studies have shown it.
Right.
And you can't blame them basically because the men are normally the breadwinners. So they want to make sure that they have enough to take care of their family.
And do you find that men are more confident in terms of their financial knowledge?
For most, I would say it has changed somewhat in terms of the landscape, because even the social pages now bombard persons with different things. So it's a balance. That's how I look at it in these days.
Right.
So women are more cautious in terms of investors, with an eye towards the future, while the men tend to take more risk. That's just how it is.
Okay. And what about any concerns that single women and single men have? What do you think those top three concerns would be?
So how you're living in terms of if you're living comfortable.
Yes.
That would be maybe the main one, having smaller debt over time, where you think about as the older you are, you have less debt. And last but not least, be able to manage your expenses. Because when you think about it, as you go through your life, you will always have expenses if it's only just the utilities. So both sexes will look at them different.
Right.
And, they would plan according to it.
Okay. So men look at it one way, women look at it another way. But I mean, they're, in terms of their goals, they are similar. It's just that they approach it in two different ways.
Yes, they look at it different. And, I always say a budget is also always, important to get in that mix of things that they can know exactly what they're planning towards.
And in terms of creating that budget, what do you say? It's better that this is something that is done together?
What I've seen, over the years, the planning in terms of a relationship, a couple, they're married, so you find that, okay, someone might be thinking of keeping an account that the other person don't know about.
Right.
I'd advise against that, because over time you want the trust to be there, that union. You say, okay, we are legally married.
Yes.
So we share everything. And, good communication is a key component. So the wife needs to know what the husband is doing, and the vice versa.
Yeah.
And once that is practiced, you find that, you have a healthy relationship.
I love those 2 points you mentioned, Peter. Trust, communication.
Yes.
2 very important things, because studies have also shown that most of the major disagreements that take place in a relationship tend to stem from financial problems. So, you spoke about the budgeting and, doing it together. Trust, very important.
Very important, yeah.
And you said the communication, so spouses need to communicate on all major issues.
All major issues, because when you think about it, having an account, both persons will be, putting funds in that account, and they know that, okay, this will take care of the household. It's no different when you think about from a standpoint of the government. So
yes.
the male is, Minister of Finance, and the woman is, Environment and Housing, for argument's sake.
I see Dufton over there
Dying.
smiling. Dufton, don't worry, you'll get your chance. You'll get your chance. You're going to, can't wait to hear your commentary.
But when you really think about that budget, though, the key to handling that budget in terms of, you set the agenda.
Yes.
What are your major points? What should be, the most focal ones, and you both are channeled towards that. The budget can be sound and, complex sometimes, dependent on what you have in mind,
yes.
as against the medium to long term. And you need to review that from time to time. What's the income is like, for both individual in the relationship, and what time period you're setting on the horizon to achieve whatever objectives.
So when they're doing that budget, they must sketch it out, but do it together.
Yes, it's always good, because when you think about the communication, I'll go back to that, because that is a key component. If the right hand is doing something and the left hand don't know anything about it, then you're going to have a disagreement.
Peter, I agree with you 100% on that one.
Yeah.
So what about, continue to talk about financial planning and security. They say wealth begins with reducing what you spend, lowering your debt, and putting away some money. So you have your income, and you say, all right, you know what, this is what I have for expenses. Let me take out some and use that as savings. How do you level up that? How do you level up those savings?
So, and that's where I go back to the same communication.
Yes.
So you'll have to decide, what is it? We're going to have 2 accounts, or what is it going to be? This is going to take care of the short term in terms of needs as against the long-term needs. And once the both can agree on that, then you'll have, an agreement going. The collaboration will be there.
Excellent.
And once that is going, you find that, both parties will be okay in terms of whatever decision is made. Once you have the disagreement now where no communication, the wheels fall off.
Yeah.
So it may take some time for persons to buy into this, but over time, once the discussion is had, then you find that managing the investment, that can be achieved.
Okay. And I suppose in terms of managing that investment, I mean, it must be a realistic thing. And again, it's something that's shared between the male and the female, the man and the woman.
Yeah, so you always hear they talk about the SMART goal.
Yes.
So when you think about it, it has to be specific, measurable, attainable, reachable, and then in terms of the time span. So
the time bound, right?
Yeah, so when you think about it, that always have to be in the mix. We spend a lot of our time, saving. You have to plan towards that as to what is it you want to achieve as a family.
Yeah. So successful plans will also require a significant degree of financial planning.
That's a must, because it takes cash to care.
Yes.
And not having that in the mix of things, then you will have a disagreement. So the successful plan, how you acquire certain, objective. The financial planning is a key component where both parties must be in agreement with.
Perfect. Now, are there any steps that someone should take in terms of putting together a financial plan?
Yeah, so at Scotiabank, we use different models, and we have one that we share with our customers from time to time. You assess your financial situation as to where you are today.
Yes.
And once you do that, then you're going to create the budget, which is step 2. After creating the budget, you're going to set your financial goals. So it's either, the vacation home, or it's travel. You decide whatever it's going to be, or it's, children education or further study for the individual.
Yes.
You name it. Know your risk tolerance. So when you think about it, you don't want to take on, risky products that will cause you to lose all your funds. You want to take, conservative products that will, have the funds for you later down the road.
Right.
You want to work out and implement financial plan, and that's where the both of you get involved. And then last but not least, you want to regularly review the financial plan, make sure that things are going according to plan. So, you decided that, okay, in 3 years or 3 months, this is what it's going to be. You want to check from time to time that you're achieving that.
Perfect. Now, what about, defining and agreeing on your financial objectives? Do you think that's important? Do you think that's a critical success factor?
It's a critical one, because when you think about goals and objectives,
yes.
Not having it even on a piece of paper is, when you say, recipe for disaster.
Yes.
People use vision boards, and they would put something on the refrigerator door to say, okay, this is what we want in a diary. Now they have smartphones, and you'll have that all day. You set your reminders, things pop up from time to time. So you realize that, the financial objectives is a must. You must know what is going to happen at whatever time, so that you prevent, if you want to say, leaving yourself in a financial bind.
Okay. So in terms of, your financial future, what do you think a good financial plan, what are the features?
It needs to be quantifiable and achievable.
Yeah.
Don't go set some, far out target that you can't achieve. That will just frustrate you even more. It needs to be
realistic.
Needs to be realistic.
Yeah.
Clear and have a, defined time frame. So if it's going to be 3 years or 5 years, you decide what it is. And you need to separate your needs from your wants.
That's an important one.
And when you talk about needs and wants, there's something that I use a lot. So do you need it or you want it? So the want can stay, but you must get it.
Yeah.
So, you look at things in that way. So if you're able to follow that suit, then it's a good thing to achieve your financial objective.
You mentioned something which I like, where you said the man and the woman, they should come in to Scotiabank.
Yes.
And you spoke about that 6-step
yes.
planning phase. I really like that. So, we should agree on, that is, both parties
yes.
should agree on what those goals are. You said they should be written down, that kind of concretizes it, and come into Scotiabank so that we can help you in
any of our branches. We're ready for you.
Okay. Now, in terms of reviewing, how frequently should this plan be reviewed?
We advise periodically.
Yeah.
So when you think about it, you'd have set a goal for maybe a year's time. Quarterly, you can look at it to see where you're at. Are you achieving? Do you need to make adjustments? Or is it going as planned that you don't need to do anything about it?
Yeah.
So the financial planning process, the success will depend on the quality and the clarity of the information that you put into this thing, because whatever you put into it is what you're going to get out of it.
Yes.
That's just how it is.
I like that point that you made, where you say it's good to have a plan, but it's always good to step back and say, is my plan taking me where I want to go? So that whole review process is very critical. Important. Yeah. And what about the advisor now? Because you spoke about Scotiabank and what we can do.
We have what we call personal banking officers, or premium relationship officers. And all our branches, you can find one of those. You just sit down with that officer, and they will, we have various tools. We'll take you through the process, look at where you are in the customer life cycle, and tell you, offer you advice and solution as to what we think you should be doing, because that's all we do. Offer the advice. You will have to make the decision thereafter.
Yes.
So the process, you look at the income and the expenditure. That's a key component where, whatever you earn, what the expenses are, where you're coming out at, You look at the assets and the liabilities, how much assets you have as against liabilities. Do I need to acquire more assets, or do I need to get rid of some of the liabilities? And then you need to look at the risk attitude.
Yes.
So the risk
Yes.
appetite is a key component. If it's a relationship that one party is willing to take risks and the other is not willing to take risks, then you're going to have a disconnect.
Some kind of disconnect.
Yes. So you need to ensure that things are flowing in that particular order.
Okay. And so you spoke about the implementation and the review of the financial plan. Tell me some of the things that we can determine from this.
So when you think about even your pension,
Yes.
and we always advise our customers that you want to check in as to what your pension will be like. So we always advise to maximize your pension contribution.
And start early.
Start early.
Start early.
Because when you think about it, that compounding effect, when you reach that age of retirement, it needs to be enough for you to live the life after work. Because a lot of persons don't think about life after work.
And you made a very good point there. And one of the things that we did not think about, and it's very relevant right now, is we are now in this COVID pandemic. A lot of people weren't thinking about
No planning.
health. Yes, the need for insurance, because what we've realized is that, especially with COVID, it affected
Everything.
the elderly.
Yes.
And when we are going to use our retirement funds, we don't want to be using up all of our retirement funds for a hospital stay. We want to ensure that after we've taken care of ourselves, we still have money to live.
Yeah, so even at Scotiabank, we offer insurance products
Yes.
and services. So when you walk into any of the doors, you'll ask for an insurance advisor. An insurance advisor will take you through the products and service that we know is right for you. You'll make the decision as to what you'll take. So you're talking about pension plan, you're talking about insurance plans. And, even just recently we have what we call funeral plans.
Yes.
So, we're thinking about the total cycle. So it's always good for you to get some advice and then you'll put necessary action in place to materialize down the road.
Okay. So financial planning is an ongoing process. It's not just
It
something
never
static.
stops. It never stops.
Yes.
You have to review the action plan and you need to do that regularly, depending on what your long-term goals were. So you look and say, okay, it's working, it's not working, I need to adjust.
Yes.
Life is never one street. You have to take maybe different avenues to get to your point.
Yeah. And
So
you
if
mentioned
you're doing that, you're good.
And earlier I heard you mention SMART goals. You want to just, tell us a little bit about that and, in terms of short-term and long-term.
Yeah, so short-term goal would more than likely be like a vacation.
Right.
And the longer-term goal would more than likely, dependent on where the person is at in the life cycle, would maybe be like a mortgage.
Yes.
So, the couple, the man and woman decide that, okay, we're going to come together and we're going to take care of this down the road. So at that point, they're going to start maybe saving towards the down payment and whatever expenses that come along with that as well. And the short terms, you're thinking about the emergency fund.
Yes.
So as you mentioned earlier about COVID coming into the mix, there are a lot of persons that were caught without this in the mix. And then, you are a financial bind. And, that now creates another different mix of things where your credit is impacted.
Yes.
Because you're not able
Yes.
to service your debt and you end up spending more. The credit card debt is going to be, when you think about it, and I always offer the advice, whatever you're using
Yes.
is whatever you're able to pay back. Once you get to that mark where you're just making minimum payments, that's recipe for disaster. And you want to be saving towards a vacation, that's a short term. The medium term now, we're talking about the down payment on the house, as I had mentioned. And the most important long-term goal anyone can have is just to saving towards retirement.
Perfect. So when we look at, summing up everything, the building blocks of financial planning, what would you say those are?
So I would put the emergency planning
Yes.
at the core.
Yes.
Insurance planning. So most persons think you only need insurance now. You have to acquire the insurance some people think about insurance that is something that they don't benefit from. But insurance, when you really think about it, it offers you both things. It's the security. So you're saving, and most of the insurance now that are offered in the marketplace, you're talking about a twofold, where the investment side in terms of what you can pull from it at some point, and then the insurance coverage side that will kick in the event of that emergency, and sometimes you're talking about debt. And then the investment planning now, where you're going to say, okay, I'm going to purchase stocks or bonds, or I'm going to go into a fixed deposit, and I'm going to look at getting returns quarterly or whatever the medium in terms of the frequency of the returns, separate and apart from the major one now,
Right.
which is the retirement planning. How much is it I want to retire with in terms of will I be able to manage certain bills that I used to take care of while I was working? So if you look at it in that four pillars, that's how in terms of cover everything.
Right. So, earlier you're speaking about, your income and your expenses and taking money out and saving, because, and you said that saving, you want to level it up, and you spoke about some of the investment options that they can get at Scotiabank. Speak to us a little bit about building wealth,
So
and the four principles or the principles.
how I see it, it's always good to start early. So when you think about investment early, someone who is, let's use that age, 20 years old, more than likely will work for another 40 years.
Yes.
So imagine if from the day one they walk into that organization, they started to put something aside that, okay, this is going to be for later. That compounding effect in 40 years' time, whatever it is going to be significant.
Yes, yes.
And you have to do it regularly. So you think about it, you might want to do yearly. We advise monthly would be a good idea. So monthly you're putting in an amount and you're religiously sticking to it. And you have to have that discipline. We find that a lot of persons want to think about creating wealth, but there is no discipline involved. But you have to stick with it because it's a long-term haul. Because that's what you're doing, you're saving towards the future.
Yes.
And then you need to diversify your investment. You're not going to stay in one instrument only, multiple. I think it's Warren Buffett that told you about that in terms of diversifying your investment, multiple income stream makes it easier for you down the road.
Not putting all your eggs in one basket.
Yeah. And then you want to stay invested. It's not, you're not going today and you pull out tomorrow. No, you're in it for the long haul. And if you're able to follow those four basic principles, then you should be able to build wealth in the future.
Peter, thank you very much. Very, very informative discussion. And on that note, we are going to turn it over to our audience. We're going to take some questions. We have first question from Sarah H. from Zoom. How should we approach joint accounts? Joint accounts for family expense and separate accounts for personal spending? What are your thoughts on that one, Peter?
That's a good question, Sarah. So I always think that it's best that you have a joint account because you're talking about that trust factor that is normally, that thin line. You have that joint account, monies are in the account, everybody knows what is happening, and you're accountable to each other. So I always think that it's always a good thing to have that joint account, that both persons knows what exactly is happening.
And so I see Dufton over there, he cannot help, he can't hide that smile. Yeah. What are your thoughts on that one, Dufton? Joint account or separate accounts?
No, I actually agree with joint accounts because relationships are a commitment of trust.
Right.
And when it is that you're now taking on stuff as a couple, as now two becomes one, then I think the joint account is where that one place where you can say, okay, hey, here's the cookie jar. We need, anything we need, we go to that specific cookie jar. So put the money in the cookie jar and then we take it out and spread it as we see fit.
And both are seeing it. The male is seeing what is in there, the female is seeing what is in there, the man is seeing it, the woman is seeing it. And it ties right back in to what Peter said earlier about, there must be that communication. If you're doing this thing, it must be done together, so that you can ensure that whatever it is you're building, it's built properly.
It is.
Okay, so we're going to go to question number 2 from J.J. Matterson on IG. What developments would most likely influence a man to start an investment or retirement plan? Peter, what are your thoughts on that one? What do you think what are the developments that would make a man start an investment plan or a retirement plan?
Good question, J.J. Matterson. So depends on the customer or the person in terms of their life cycle. So if it's a case where, a family, he's just started a family, then that automatically will, prompt him to say, okay, I need to start investing because he's thinking about the future.
Yes.
It could be based on his experience as well, where he knows someone who is ahead of him, had some investments and he's looking on and say, okay, they're living a comfortable life now in terms of retirement. So those two things, I think, straight off the top would cause someone to start thinking about investment.
Yeah, and just to add to what you said, if you think about it, we have, you mentioned this earlier in terms of how long it is that we're going to be in the working world.
Yes.
And while you're working, you have that income allows you to do certain things. You can pay for your vacation, you can buy the things that you want. Mm-hmm. When you stopped working, you do not have that income in. What you want to do is make sure that you can maintain a similar lifestyle. Mm-hmm. So it's very important, as you said earlier, Peter, when you are investing, when you're saving for your retirement, you start early because
early.
you want to make sure that you are maintaining that standard of living.
That's correct.
All right, one more question here. We have Chad Mr. Wealth on IG. Interesting handle there. How do we increase wealth creation opportunities among men? All right, how do we increase wealth creation opportunities among men? Peter, you want to take a stab at that?
Okay, Chad, good question. So when I think about our current situation now, one sector that I think, can be explored. And we're thinking about the farming industry.
Yes.
So, recently you would have seen a little boy, taking care of some small animals.
Yes.
So that is one component.
So start doing
Start doing the business. And entrepreneurial, aspect, you have to develop that. Recently you hear about Uber coming to Jamaica. That's another opportunity. So you're thinking about anything that you can do that you will get in more funds in terms of what you're earning now.
And you made that point about, the child or the young person, seeing a potential business opportunity and getting into it.
Yes.
What we've seen recently is that more and more younger people are moving away from a traditional
9 to 5.
going out and working for somebody,
Yes.
and they're creating their own businesses, they're creating their own wealth. We have, the TikToks, you have the Instagram, you have the Facebooks, YouTube. We have individuals that are deciding that there are, because of technological changes, there are no opportunities out there for people to start making money and creating wealth for themselves. So that's a very interesting question. All right, next question from Kara Queen on IG. Is a lack of enthusiasm affecting the ability of men to create wealth? And Dufton is over here furrowing up his brows. Dufton, what do you think on that one now? Is a lack of enthusiasm?
I'm wondering.
Is there a lack of enthusiasm on your part, Dufton?
No.
To create wealth?
Not at all.
No. Okay.
Not at all. It goes back to, what we're talking about before in terms of, creating wealth and opportunities. You guys spoke about TikTok and the social media platforms that you can earn from. But it's all about just different opportunities. I remember somebody said to me once, he said, "Do you want to be rich?" And I said, "Yeah." And he says, "So what do you do?" I said, "I have a job." He said, "Okay, so are you going to be rich?" I said, "Well, I'm going to go to school in the evenings and I'm going to get I'm going to further my education, I'm going to get a larger job, a bigger job and stuff like that." And he's like, "Okay, so how are you going to get rich?" I said, "What do you mean?" I just told him my plan. Yeah. And he said, "How many bills do you have? List them out." And when I listed them, I got about 7. He said, "How many places do you earn from?"
1.
I said, 1. He said, "You'll never be rich." Because you're always using your one source of income to cover your 5 bills.
And Dufton, yeah, you just made a wonderful point a while ago, and it ties into what Peter said earlier.
Exactly.
Leveling up your savings. So when you take out some of that money from your income and you put it into another investment opportunity, that investment almost becomes like a silent partner helping you to earn. And that is how you create the wealth. So
you multiply your chances.
Yeah. Yes. So instead of having just that one source of income and the 6 or 7 expenses, you now have more than one source of income.
Yeah, and because you put 8 hours into one space, it doesn't mean that you need to put 8 hours in all those other spaces.
No. Yes.
You can put an hour there, half an hour there, 20 minutes there, but it gives you the opportunity
to earn
for multiple sources of income.
I like that. All right, let's take another question. Squire from Zoom. Most people spend from savings account when using their debit card, but I was informed that it's best to have a checking account. What is your take on the subject?
All right.
So Peter, yes, let's.
It's a good one, Squire. We don't recommend that. You can have 2 savings accounts. You just have to have that discipline in terms of how you manage. So you'll have one account, and we can help you with this, where you are only able to see one account from the ATM.
Yes.
So you have 2 accounts. You can see both online.
Yes.
But when you go to the ATM, only one you're able to view.
Scotiabank is saving you,
so I'm
taking away
yes.
the temptation.
So when you think about it, you can have 2 savings accounts. You can have a checking. We're not for checking account because we're in the digital age. We want to move away from writing even a check. We want you to be able to go online, make a transfer. It's instant now when you think about it. You transfer from one account to the next,
Right.
and it's there in a couple of seconds. So that's how we'd advise you.
That's exactly the same thing I do, actually.
Okay, great. So we tested and proven.
Actually, I have 2 accounts at Scotiabank, and
Okay.
I have my electronic access account
And
and
you
the
have-
primary savings.
That's right.
So it's Scotiabank building wealth.
Yeah.
All right. Another question from Leon Price from Zoom. Do you believe COVID has pushed a lot of people to buy insurance and start investing for the future? And this one now, in terms of, buying more insurance and starting to invest for the future, I think one of the things that COVID has definitely done is forced a lot of us to start thinking more about the future. One of the interesting things about when this whole COVID pandemic struck, and it was realized that there was this relationship between how healthy your lifestyle is and your ability to withstand this disease. The first thing was that the sale of bicycles skyrocketed. You could not get a bicycle at all. So COVID definitely changed the way that people started to think about the way that they were living. Now, Peter, have you seen from your own personal experience in the branch, have you seen an increase in the demand for insurance products because of COVID?
In the first year, not so much, but now, yes, we are seeing that where persons are acquiring more insurance products.
Right.
And investment as well, because they're thinking, okay, even now we don't know when this thing will end. And as such, they see the advantage because, it could be like that in a snap and someone is in an hospital and the next day they're in the morgue.
Right.
So the insurance is a key component. Having the insurance now will prepare them for the future because, as I said, that insurance is protection for them.
Yeah. And so, Dufton, before we take the last question, how has COVID affected the way that you think about planning for your future and investing for your future?
COVID-19 is a symbol of unforeseen circumstances, situations. You just don't know.
Yes.
Like one day so I'm from the entertainment industry. One day it's on and the other day it's off.
Yes, yes.
Literally.
So
off.
you felt it immediately.
Right. Yeah. But before that, because I'm in the entertainment industry, it's not a steady paycheck, it's not a set paycheck every week, every 2 weeks, every month. I have to plan 3 months in advance, 6 months in advance. So I was already putting aside some money. So when COVID hit, I had a little buffer. So I could plan for at least maybe I have 3 months, don't buy so much groceries, but I could plan. And this is where financial planning comes in because you never know what's going to happen around the corner. So always be prepared. So I think COVID-19 really opened everyone's eyes to, hey, today something can be great, and then tomorrow
it
it's
just
not.
disappears.
It literally disappears.
Yeah.
So have some plan. Have something that you have saved, or how you're going to execute 3-4 months down the line if things don't go according to how you want them to.
Excellent words. All right, final question from Kevin King, email inbox. At what age range do men start to better manage their money?
He looked over. No, I can take a
Peter,
a
you
first
are
stab at
Dufton.
this one.
Let's see. Yeah, this one, no, yeah, because this one is very
Open.
Yeah, this
Yes.
is open. I mean,
I really think that
opinion time.
it's no longer age range.
No.
I think now it's just knowledge.
Yes.
I think the younger persons, even at 13, 14, they're being more of entrepreneurs.
Yeah.
So they're already managing their money and seeing opportunities down the road. So I don't think it's no longer age range. I think it's just socialization.
Yeah.
I think it is cultural. I think it's about family. I think it's a lot of other factors. I don't think it's just age.
Okay. And I mean, I agree with you in that one. I mean, I think now, especially with the advent of certain technologies and the pace at which technology has moved, it has created opportunities for very, very young people and young people who are au fait with the technology to find opportunities to create wealth for themselves.
Yes.
You know, as you know, you guys mentioned earlier, the Instagrams, you know, the YouTubes. You have children who they have their own YouTube channel where they are testing toys.
Yes.
And there's a child on YouTube who has a channel where he reviews toys and it's watched by millions and millions of people, and this child now has a paycheck. So
income.
technology, he has an income. Yeah. So technology has changed the way that people can earn, and because of that, it has created opportunities for people at a very young age to start earning money.
There's no limit.
Yeah. All right, so very, very informative questions. I mean, it sparked a lot of discussions. Thank you very much from the audience. Now, we're going to talk about managing financial expectations.
All right.
And let's just talk a little bit about this, Dufton.
All right.
Traditionally, men were seen as the providers in the family. While women were the ones who, they stayed at home and they took care of the children. What are your thoughts on that? Do you see those roles evolving?
Evolving, not necessarily evolving, but I see it changing.
Yes.
Because women, and it's just on one side, I see where women are no longer the ones to stay at home and take care of the kids, unless she chooses to do so, or they have made a decision as a family that she will do this and the man will do that. I really think that men, as providers, traditionally, that will never change, because I think it's innate. I think it's our DNA as men to provide and to protect. But women, because of the financial climate and also the advent of multiple opportunities, women are now stepping out
into the working world.
And they are competing with men for the same jobs. If you look at the workforce,
you have that single income household. It is now dual income.
Mm-hmm. And with a dual income household, you can achieve so much more.
Yes. As Peter said earlier, I mean, the mortgage is easier when you have two earners that are saving towards the purchase of a house and the paying of a mortgage.
It's simple math.
Yeah. Yes.
It's simple math. It really is simple math.
Right. So what are your other thoughts in terms of like couples? In terms of plans and relationships?
I think as individuals, we are much more aware of money.
Yes.
And how we would spend our money, and how we would like to spend our money, and how we want to earn our money. And because of that, I think couples, two individuals coming together to form a couple, they've already stepped into the space with their individual mindset. Hey, this is what I would like to do. So let me find someone who is of like thoughts, like qualities, and then that couple is almost like a power couple at the very beginning. So couples now, they are. We're talking off air where I said that a man doesn't become a husband, or a woman doesn't become a wife at the ceremony.
It's before that.
They are viewed before, and so this is how they come together. So couples are moving forward.
Yeah, so those considerations are done even way before.
So
they consider, how much, one partner is going to contribute in terms of, their monthly income, stuff like that. Are thought
and think about it. You join together with a woman, and she's already paying for her own apartment.
Yes.
She already drives her own car that she owns. She already has her own savings, her own investment. What are you going to add
to the table?
Yeah.
And vice versa.
So two critical points here. So couples in serious relationships, they make their plans before the marriage, and they also consider the partner's contribution
from the very outset.
Now, you're speaking earlier about the role of men and women. Do you believe that women are socialized differently than men?
Yes, I do think women are socialized differently from men.
And what about their
in terms
predisposition for risk taking?
For risk, I don't think it's that different now.
Yes.
I don't think it's that different now. I think it's
level playing field.
I think in a lot of ways, women will take more of a risk than men. As men, we will sit at, say, level 3, and we're like, we're fine. Level 3 works for me.
Right.
A woman is like, nah. Let's see what level 4 is, or level 5.
Because she has that long-term goal. And it's interesting because this ties back to something that both of you said earlier. Traditionally, before, when it was just the man as the main income earner,
right,
and the woman was the stay-at-home nurturer, I suppose that most of the decision-making would have been by the man, because naturally he was out there working. But as societies change,
Right.
and the need for a dual income household
Right.
has now come about. You find women are now more in the working world, and women are making decisions. So before, when a woman was at home, helping with the raising of the family, her opinions about risk didn't really come up, or she didn't really have an opinion per se, for want of a better expression,
Yeah, no, for want
because
of a
she
better
wasn't
scenario.
in the investment world. Her focus was around the children. But now with dual income households, the woman is now out there earning, and she is,
Yeah,
listen up.
and stating that the example, I mean, you will get some pushback in terms of how it could be different. But I understand totally what you're saying.
Yes.
And what happens is that when there's a dual income household, is that a man, for instance, is $100,000 and say, hey, we only have $100,000, so I don't want to risk it on that. A woman with her $100,000 say, okay, hey, let's not touch yours.
Yes.
Let's risk mine.
Yeah.
So men tend
Right.
to be overconfident, you think? Prone to overconfidence?
No, it's not necessarily overconfident. We want to provide for our families.
Yes.
And we will go, okay, I've earned this amount, and I'm not seeing the risk. But if she's able to say, hey, we're not going to lose your 100,000, let's try mine. Worst case scenario, we're still at 100,000. Best case, we double, triple what we already have,
Yeah.
and it's greater. And you're like, okay, fine. Because that's what risk is.
It's about, yeah.
That's exactly what risk is. We're able to risk that amount.
Okay. And do you see that probably men are likely to carry more debt than women?
Wow.
Tough one.
Or not?
I
I thought that was difficult call, right?
It's hard. I think someone in the professional space
Right.
who actually will see.
Yeah, it goes back to the psychological makeup.
Yeah.
Yeah, I'm not sure about that. I
And
think
dependent on where they are in the life cycle.
Okay.
right.
Now, in terms of, it's important to deliberately manage financial expectations. And we said together, right? Because that's one of the first things that Peter said. This thing is not going to work if, both parties are not doing it together. So, deliberately managing financial expectations together can create stronger relationships.
And it comes with communication.
Yes.
Open, honest, uncomfortable, unadulterated communication. To say, hey, this is where I'm at, because discussing money is almost taboo.
In a relationship.
It's almost as taboo as asking a woman her weight.
Right.
Don't kill me for this one. But it is.
Yeah.
Mm-hmm.
It is almost taboo for you to say, okay, honey, how much do you earn?
It doesn't happen.
It doesn't happen. But once you can cross that barrier and have that open conversation, it opens a whole new world.
Yeah. So would you say there are, 3 strategies, that are proven to help couples manage this financial uncertainty that they may face?
Yeah, I think there are strategies, and we can probably break it down to just three simple ways. The reducing the uncertainty. Once you reduce the uncertainty, it is the open, honest part of the communication.
Yes.
So I know, she knows, and they know we can move forward. Maintaining it. And once you can maintain, you know that, hey, okay, fine, this is where we are.
Yes.
And I know this is where we are. You know this is where we are. Let's keep it there, or we can reduce it. And in worst case scenario, you adapt.
Yeah. And that ties right back into what Peter said. When you're doing that financial plan, you want to review it. And if you realize it's not working, you make changes. So you adapt. Either you adapt your financial plan or you adapt your behaviors towards investing.
Yes.
Okay.
Yes.
All right. So there's some suggestions on managing financial expectations, right? Some of them are establish individual and joint financial goals. Peter said that the goals must be smart. We don't want to combine pre-existing debts. Managing debt is very important. We want to create a spending plan. That's something that Peter mentioned as well. Reviewing income from all sources. Right? Again, that comes back to that open communication, speaking about what each party is bringing to the table. And then we want to estimate expenses and, more importantly, track spending.
Yes. I think when it comes down to even tracking spending,
Yes.
I think the more involved a man gets in a relationship is the less he'll spend.
Yes.
Yeah.
Yeah, he no longer needs to spend on the peacock.
No.
he has already attracted his mate.
Of course.
So he will just spend on her. He will just give her his money and go, okay, hey, you are my, I don't need it. I need a comfortable pair of shoes.
Excellent.
I need a car that works, and I'm fine.
All right. And, so thank you very much for that one. Let's jump into some questions from our audience. All right, so let's go. Michael J. from Insta. As a male, how important is it to have a stable income? That one, any of you gentlemen can answer that one. As a male, how important is it for you to have that stable income to say, you know what, you spoke about, the role of the man and as a provider.
Okay, what kind of male are you? Are you the provider? Are you so for me, I look at, because I'm in the public space, I have to provide for my spouse, I have to provide for my daughter, I have to provide for my mom, my dad, my sister, my brothers. Not that I have to do it right now, but that is how I'm looking at it, that if needs be, I will have to.
Yes.
And because of that, I'm going to put myself in a situation that I am earning in a stable fashion. For me, it's going to be different from like learn the colleague beside me, because
Yeah, so
it's no different.
Let's get Peter's take on that.
no, but when I say it's different, it's because being employed, you will get a check at the end of the month. You get paid at the end of the month. I don't know when I'm going to get paid. So when I access opportunities that I earn, I have to put it aside and almost pay myself as how you would get paid.
Okay.
And it's interesting that you should say that, because that's one of the things, because there was not that consistency or that stability of the paycheck. What it forced you to do was make sure that you became a better saver, because you were always thinking about making sure you have enough for the rainy day.
Yeah.
Must. Sorry,
Peter, you're saying something a while ago. I think I cut you off.
No, so when I think about the point that Dufton is making in terms of someone who is 9 to 5 as, I guess, someone who is an entrepreneur, when you really look at both scenarios, they're not much different, really, because at the end of the day, the 9 to 5, while income is steady, the entrepreneur will have to find a way to make sure it's steady, because the bills continue to remain the same.
Yes.
And so you don't hide from it at that point. You just have to get a lot more versatile now in terms of, entertainment not working, but maybe some farming go and do it.
Exactly.
Okay.
Exactly.
Yeah,
Exactly.
yeah.
Exactly. Exactly. And these are different things that we have to do on a daily basis.
Yes.
Okay. All right, we'll take another question. Mark from Zoom. How important is it for a couple to create budgets together? Peter,
good one, Mark. And back to my point, when you think about a couple, you're talking about a union. You can't have one person, deciding on what the budget is going to be.
Yes.
Because right there's no collaboration. And if there's no collaboration, you don't have any, path in terms of, accountability. So you want to make sure that both of you are in agreement. Both of you decide that this is what we're saving towards, and you religiously put this aside each month. And, if that is happening, then you find that the boat will achieve whatever objective that they would have set out at.
It also helps to guide the direction.
As to where you're going,
As to where you're going. And, I can honestly tell you, in most cases, most scenarios, the woman is the one who will create the budget. She'll be like, okay, this is what we're going to spend on groceries this month. This is what we have to, these are the bills. This is some spending money, if there is space for the spending money. And she will be the one to do the budget. In most cases. I'm not saying in all, in most cases. But that is okay. And the budget, as I said before, helps to guide the direction, because once you know what your spending is and what your earning is, then you can make better decisions.
Excellent. All right, another question from 876 Lance DFIG. Would you be comfortable with earning less than your mate? Dufton.
Yes.
Simple answer, yes. Yeah.
That's not a financial thing. That's just that you as a human, as a man. That's you as being a man. Get over your insecurities.
Yeah.
Because
it's a reality.
It's a reality. And it comes back to the same question. When you talk about men and women, it's a couple. So if you are joined together, then, even if it's not marriage, but both of you are that union, it's okay. because both of you pulling together to whatever goals that you would have set out at.
Yeah, I think we're unanimous on that
Yeah,
one.
but even if
It's okay. I mean, if the
she
woman
can-
earns more, that
she
is,
earns more than me. I'm fine.
Yeah.
I'm fine with it.
yeah, these,
I'm okay.
yeah. All right, next question. Lion order from Zoom. How should married men tackle spending habits differently from men who are dating or in relationships?
Sir,
The collective
hold
gasp,
on.
right?
Lion order from Zoom. Let me look into the camera and look at you, sir. Married men have something called a wife. If you need clarity on that, you can direct message any one of us, or you can pop into any Scotiabank branch and ask, how does it impact? As a married man, you have a responsibility.
Yes.
When you're single and you're out there,
You do anything you want to do.
Just do anything you want to do. The WIFE. And you can put it in all caps.
All right, thank you. All right, so Rohan Royal from Instagram. Are there any products offered by Scotia specific to men?
Rowan, good question, but no, not at this time. When you really think about it, we offer products and service to both sex. We don't have anything directly. I think when I think about insurance companies, they would have things like, I know they have things for female, like,
Road Angel. Right,
Oh,
Yeah,
right,
but
okay.
we are not so fortunate at this time. So no, we don't.
So all our products are
Yeah,
men
both
and
sex.
men
Yes.
and women.
Yes.
Okay. Norris W from Zoom. I am living paycheck to paycheck. Can I still save?
Actually, I would actually ask you that question. Can you still save? That is going to be dependent
On you. Yeah.
Norris. That really is going to be dependent on you. Because if you're living paycheck to paycheck, it's one of two things. It's either you're going to earn more or spend less.
Yes, it's simple.
And if you can't, well, then I hope you do
Have a
so.
dilemma.
Yeah.
Yeah, simple math. I mean,
Yeah.
if you're living paycheck to paycheck, something has to give.
Is it-
Either
is it
you
earn
Stop
more?
Either
eating
the income needs
oxtail
to
and
go
you're
up.
eating just
That you earn more or
vegetables.
spend less.
Yeah.
Yeah. You cut some expenses and then make it happen.
Okay.
And-
We have an email from Philip who says, is it okay to split the responsibilities in the home?
Whoa, listen. This is a tricky situation. This is me.
Split the responsibilities.
This is me, Duffton Duffy Shepherd. This is my opinion. I think it's okay.
Yeah.
I honestly think it's okay. I still believe in the role of a traditional man. So there are certain things that around the household you will find as a man is he tends to fix things. He will take care of the car. He will take care of the situation, the fixing in the house. That doesn't mean he won't go in the kitchen.
Right.
Doesn't mean he won't do the laundry. It's just that it is okay. And it also depends on the couple.
Okay.
So if it is, she's okay with being in the kitchen, or she's okay with me being in the kitchen, like I
Either
know
way.
definitely in my household, I'm doing all the ironing.
Right. So I think we're agreed. I mean, Peter,
Yeah.
see you nodding your head. I mean,
Yeah,
there is
yeah, that's a given. When you-
absolutely nothing wrong with
Remember,
shared
it's a union.
responsibilities. Exactly.
And you can't make it seem, the olden days, the lady have to do everything in the household. No.
Yeah.
Those days are done and gone.
Gone.
You're not going to find a
Gone.
woman who's going to be in the household doing everything and the man just sit down watching game.
Yeah, but
it doesn't
But
work.
I think, as I said, it's a decision
Yes.
Yeah.
within the partnership.
What the understanding is in that relationship.
Yeah. So, okay, fine. This is what I'm going to do. This is what you're going to do. It's equitable. We're fine.
Yeah.
We're good.
I mean, I think we're agreed. For most relationships to work, there must be some shared responsibility. You cannot have, the
Must.
burden cannot be on one
No.
and not the other.
No, can't be.
Okay. All right. Peter Gay M at Zoom. Do men leave the financial planning to the women now?
No. No.
Straight up.
No.
No.
We will give
Insight.
we will, yes, suggestions.
Right.
And there is a lot of room that we will just, our trusted spouse,
Right.
and when I say trusted, it means that we have developed that trust because she's going to take our well-being collectively
Right.
into
consideration.
when she's making certain decisions.
Yeah.
But we will say, hey, I think we should buy another house. I think we should, invest in this product. And there are some things we go, okay, fine, here's the money. You just go take care of the rest of the stuff and spend it how you see fit.
Yeah, and I think Peter mentioned it earlier. I mean, if you were for a plan to work, a plan for the future to work. It has to be done together. So I don't think it's just the woman leaving everything up to the man. Women have their fair seat at the table.
Two heads are better than one.
Yeah. Okay, so Jono from Zoom. Should you share your salary information with your girlfriend? And she isn't my wife just yet, but should I tell her how much I earn? Dufton
looks a little comfortable.
Dufton want to leave the studio now, right?
Jono,
So should you share your salary?
Jono, that is going to be up to you, really and truly. It's like some of these questions are coming straight out of a discussion we were having before we were sitting here.
Yes.
It is going to be about trust. And we have said that men are more likely to open up their financial information to a woman than a woman to a man.
Right.
I don't know. It's just probably how we're wired.
Yes.
Like once we are into this person, we want to give them the world. We open up our world to them and say, hey, here's all of it.
This information is all yours.
But you have to think with your heart and also your mind.
Mm-hmm.
Because if it is that this person isn't trustworthy in other aspects of your relationship, why trust them with your money?
Yeah. So, I think that the point is that decision about how much you choose to share with your girlfriend, it really is dependent on you, and you must make it in an informed way. You must know about the person you're sharing this information.
Yes.
And I think that applies not only to your salary, but everything else. The amount that you share with people is going to depend on how trustworthy you think they are.
Yes. Yes.
So that's a personal decision. So each person has to make their own judgment on that one. All right, Conroy, email from Conroy. As a single dad that is in a relationship, how do I manage the expense between my child and my girlfriend?
Is this relationship advice? I really think that the scale is going to be tipped towards your child.
Yeah.
Your child didn't choose to be here. You chose this woman to be your girlfriend. You have to provide for your child. And it also has to be reasonable. But I think if there's a necessity for you to make a decision, I think it is to go with your child.
Yeah.
But once it's a healthy relationship between you and your girlfriend and your child, I think it's something you can sit down and work it out.
I don't even think you have to have a discussion depending on how the relationship is, because she knows that the child is there.
Yes.
The child was there before her.
And she she often more than not will go, hey,
take care.
Take care
of the child.
Yeah. And it's a very important point, because as a parent, your responsibility is to your child.
Yeah.
Yes.
So you want to make sure that you're taking care of your child.
Yes.
So it should not be that money is being spent on the girlfriend or even the wife to the detriment of the child.
No way.
And as you rightly pointed out, Dufton, it's unlikely that the woman in the relationship is going to require you to spend on her and have the child suffer.
Right. Once there's a level of respect and trust,
there will be understanding.
Yes, she will understand.
Gentlemen, this has been a wonderful discussion. Very, very engaging conversation. But before we go, some key takeaway points. We all have an attitude towards money. I think Peter pointed that out. Our physiological makeup plays a key role. One of the things that we also have to remember is that trust is important and sharing information is important. And Peter pointed out that we view money in 4 ways. Now, men and women, they tend to be very generous, but let's jump back and, look at those 4 points in terms of the 4 ways that we look at money. Peter spoke about money as power, generosity,
security,
freedom. Yes. So we are all vulnerable to unhealthy ways of thinking about money. That's something that we need to address. Now, men and women tend to have different priorities for their savings, and they have similar financial goals. Men tend to set aside nearly twice as much money for their long-term financial goals as women do, and men tend to be more confident in their financial knowledge and more open to risky investments. Creating a budget together is very important, and it's important if we want to avoid conflict and ensure that that budget works. Now, in terms of gender, regardless of gender, you know, what if you're a man, if you're a woman, wealth begins with reducing the spend. That's something both of you just said a while ago when that gentleman asked about living from paycheck to paycheck. Reducing the spend, lowering your debt, and putting some money away. So like Peter said, we're going to level up the investments. Financial planning is an ongoing process. It's not a one-off thing. You plan, you review your plan, and you make changes as the circumstances change. And we need to deliberately manage our financial expectations together to create stronger and more lasting relationships. All right, so gentlemen, again, wonderful discussion. We want to thank everyone for joining us, our ScotiaLive webinar today. Special thanks to our guests, Peter Mohan, Dufton Shepherd. We're available to respond to any additional questions you may have. Please hit us up on Instagram at Scotiabank JAM. Thank you for choosing Scotiabank and have a wonderful night.
The new Scotia app with a faster low-time bank wherever, whenever. Be in control and transfer funds or pay bills quicker with just a few taps and a swipe. Plus, we're serious about security. Want real-time notifications for all your transactions? Check. Log in with fingerprint? Check. Turn your credit card on and off? Triple check. Protected. Your money is safe and secure. Bank wherever, whenever. You choose with the new Scotia app.
Wow. Stop. What?
Oliver,
Is who that hollering out my name?
who are you following because Scotiabank?
Quick, go which bank? Whole foot like we fit on our yard and bank online.
Ain't that safe?
It's the safest thing. Just download the Scotia app or go to Scotia online for everything like transfer or check your balance and everything online free.
Free?
Bank with Scotia online. Let me show you. But I'm not going with my phone.